Hello friends, in the series on income tax cases, today we will discuss a case in which the addition under section 68 was made to the income of the assessee on the allegation that the call money in respect of shares has been received by the assessee from companies which are involved in entry operator business, and the copy of the statement which was relied on by the revenue was not available with the revenue till the assessment was completed. So the issue before Delhi ITAT bench was that when the revenue is not able to produce the statement of that person on the basis of whom the additions have been made, so whether in that case the addition is justified. This issue has been taken up by Delhi ITAT bench in the case of GSM Oilfield Services Private Limited versus Deputy Commissioner of Income Tax, and this case is reported in 128 ITR Tribunal, short notes 33. The date of the judgment is 21st November 2025. The present case relates to the assessment year 13-14, and the assessee is involved in the business of technical consultancy in the present case. During the previous year 12-13, which is relevant to the assessment year 13-14, the assessee has received call money on 52,550 shares at the rate of rupees 400 during the year. In that call money, rupees 4 was representing the capital and rupees 396 was representing the securities premium. The assessee produced all the evidences including the bank statement, the proof which was necessary for proving the credit worthiness of the subscriber companies, but the assessing officer made the allegation on the basis of the statement of a person V, which was never provided to the assessee and which was not even available in the remand proceedings with the revenue, that the call money has been received from the companies which are involved in the entry operator business, and those entities were related to a person V, because the V has given this thing in his statement which was not provided to the assessee. So the whole basis of the addition was the statement of V, which was not provided to the assessee even during the assessment proceedings and which was not available to the revenue even in the remand proceedings. Apart from that, call money which was added by the assessing officer under section 68, some additions on the basis of expenses were also made by alleging that these are not related to the business and personal expenses. When the matter was before the tribunal, because even the CIT appeal did not give relief to the assessee, first of all the tribunal was of the view that the assessment should not be completed purely on the guesswork without any reference to any evidence or material. The tribunal said that the revenue should avoid presumption of evasion of tax in every matter. The tribunal said that in the present case, the sole basis of addition is the statement of V, which has not been provided to the assessee, and even in the remand proceedings, the revenue was not able to produce that statement. The tribunal said that the cross-examination was not provided to the assessee and the statements were not available with the revenue. It was the considered view of the tribunal that the addition should not be made just on the basis of preponderance of probability, especially in those cases where the call money has been received by the company in the previous years and in the succeeding years also, and no addition has been made by the revenue in those years. The tribunal said that in the present case, on the basis of consistency also, the addition should not be made, and even the amendment made by the Finance Act 2022 is not applicable, which gives the requirement for proving the source of the transactions, because that amendment is applicable from 1st April 2023. As far as the addition of personal expenses on behalf of personal expenses is concerned, the CIT appeal has reduced the addition up to 10%, which was also deleted by the tribunal, and said that in the case of a private limited company, personal use or business purpose is not generally applicable. So if the assessing officer wants to make the addition, then there should be some evidence that those expenses have been incurred for non-business purposes or for personal purposes. So the additions were deleted by the tribunal. At the end of this video, once again I am repeating the name of the case. The name of the case is JSM Oilfields Services Private Limited versus Deputy Commissioner of Income Tax, and this case is reported in 128 ITR Tribunal, short notes 33, and the date of the judgment is 21st November 2025. Thank you, friends.